Hello, fellow traders. 'Tis I, the Rumpled One. It is Tuesday, May 29th, the year 2018. Let's talk trading. Why you do not get better at trading, part 7. Okay. I've got about 7 more parts to this so far, but a lot of them kind of overlap. And so I think one of the ones I have here that might be a big one to go over today would be unrealistic expectations. Because there's a lot that can fall under that heading. One of the things that I think would fall under that heading would be getting rich by trading. I mean, we've all probably had those delusions of grandeur that we're going to take $1,000 account and run it up to $1 million, in a week or two. Okay, maybe a month or two. Okay, maybe 6 months. Okay, maybe a year. Now, we can, and even I have the, the $1 trillion spreadsheet or something that, shows how you can do it if you just make 2% a day. But the thing is that really a realistic expectation, or does it fall more closer to a delusion of grandeur? Because, see, one of the things that I believe falls under unrealistic expectations is underestimating the amount of time it takes. We don't have the patience. It's like the AC/DC song, ain't no fun waiting around to be a millionaire. I mean, really, it's not, right? The other unrealistic expectation is size. We take these little teeny 0.01 dime a pip trades and we're going to want to make $1 million. I can't help but laugh. So we need to have more realistic expectations. It's just about and money and risk management. We need to have realistic expectations too. If we crank this up too high, we're going to wind up, with elephant ears, or pockets hanging out. If we have a position size that's just too big, we're going to wind up getting wiped out once again. So that all falls under unrealistic expectations. We look at here a weekly chart. If we trade off of this weekly chart, if we use this as our tool, I think we can have some pretty realistic expectations when it comes to making, 10 pips or more. I mean, we can trade the breakouts here, we can trade the wick zone, and we can usually pick up 10 or more pips. I mean, that's pretty realistic. We can trade the weekly crossover right here. It's good for 120 pips to the downside. We can trade that weekly breakout right now. It's good for 41 pips. So you see, looking at this chart, we can have some pretty good expectations, pretty realistic expectations to make money. And you can see here, we've got one that hasn't filled the gap. So if we trade the gap, we have pretty, once again, realistic expectations that we can do this and be profitable. But once again, we're not going to, if you want to make $1 million, you probably should be wagering, $100,000 or risking that if you want to make it quick. If you want to make it slow, that's a whole different thing. But even if we had $1 million account, if we risked 10% or 100,000, that would be pushing it. Now, if we risked maybe 10,000 per trade, that's only 1%. That's a little more realistic. So once again, we have to keep our expectations in the realistic realm. And looking at the daily, I mean, here was a big payday, break out of that daily low. Nice payday, right? And then once again, we've got 84 pips below the daily open. Got 67 below the daily low at the moment. Could have probably picked up a few more if you punched out at 108.42. We've got some really nice ranges today. I hope some of you traders benefited from that. And so once again, we can have realistic expectations here that, we're going to get some nice breakouts through the, wick zones, or just, crossing these horizontal lines. Nothing fancy, just simple horizontal line crosses. And here we have the buy zone. Once again, we had a short trigger here. You either scratched the trade, took a little profit, or you stopped out. And then on the next trade, if you let it ride for a while, you more than made back that stop and then some. And right now, we're in the green rat zone. See, at this time, there really wasn't a red rat zone because the green rat zone was overlaying it. But you see here, we pushed down, we came up, and now we're back down into it. So green rats might have another opportunity today. Got about 5 hours left in the day. We're 13 pips off the bottom, so we might see an exit of the green rat zone. Once again, simple trade. The pivot never got touched. Got a missed pivot here. And we're almost down at a weekly S1 support for those traders who like to trade the pivots. See, we've missed the weekly pivot right here, 109.93. Look for that to be taken out sometime in the near future, possibly. And price action, I mean, it's simple. Realistic expectation would be you see a 3 ball here, you go green at the line. You see a 1 ball here, you go red at the line. I mean, you see this every day, so to trade this and to believe that you'll be able to make a few pips, that's a realistic expectation. So we try and keep those expectations within the realm of reality and not pipe dreams. Here we go, horizontal line, red at the line, green at the line right there would have taken you out with a stop. So you see, we can't believe every time we trade we're going to be a winner. That's not a realistic expectation. And that's why we have the money and risk management. So when we lose, we have a controlled amount of loss. See, you can't control the amount of profit, but you can control the amount of loss barring unforeseen circumstances. And here we have the wick zone. Once again, price does not like staying in the wick zone. And here we have the holo set up. We had a lower open back here. And you see price, and now we're back in. So probably maybe next hour we'll have a new lower open and we can look to see for a long trade. And you can see there's just all kind of wavering price action. We cross below the peak, few pips, crossed above the valley, a few pips, and so on and so forth. And you can see price is just waffling. So I guess we could maybe, I could have titled this Keeping It Real. That's what we want to do. As you can see here, price just crossed above the valley of the ask. The bid got above the lowest ask, and you can see price is now going up. And I mentioned yesterday about looking at the big picture. You can see here on a monthly chart, and these dots are the mid dots. Simple chart, not much to it. I just like looking at the mid dots because usually they tell me which way to trade. So for example here, open above the mid dot, you want to go long, okay. Open above, long, open below, short, open below, short, short, short. This opened above, you'd go long. This opened above, you go long. And you can see there's usually money to be made following the mid dots. That's on the monthly. You can do it on the weekly also. See, open above, long, open below, short, open below. Not much of a short there. See, once again, you can't expect to win every time. So in this particular case, probably would have stopped out. Okay, open above long, open below short. And you can even drop that down to the daily, which is one of my favorites. Open below, 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 below. It opened right on it, looks like. Let's see, open 174, mid dot 139. What? Mid dot 139. Oh, opened above. So would have gone there. Got mixed up for a second there. And then you can see here, open below, daily. You can take it down to H4. See, open above, open below. Let's see. That looks like a toss-up, mid dot 107. The open was 111, open above, slight, open below, and so on. So you see, you can take something really simple like the mid dots, and that's all you need. And it's realistic expectation. And you can see here, there's a mess going on. And we have a missed pivot. And you can see here, we've got shorts looking to go long on the IRBs. And right here, we've got the price action. So, fellow traders, let's keep it real. Let's not have unrealistic expectations because it's not what you trade, it's how you trade it. Now, let's go drain the banks.